Welcome back. In this section, we're going to do support and resistance. So, support is a price level where buyers are coming into the market and they start buying. So sometimes when prices are falling, people start to believe that they've fallen too much and that they're not going to go any further down. The price is very, very attractive. And since prices are low, people want to buy, and they want to buy because they can make a profit when prices move back upwards. So let's take an example. Let's say that a bag of rice sells for $10 a year, and for some reason, due to a bumper crop, etc., price just drops to $5 a bag. Now, a group of people may say that, look, this was $10 earlier on, we've been buying it for $10, it's worth $10, and now that it's at 5, it's it's a very good price. We should just buy it and hold it. Maybe we can consume it next month onwards. We can save up or reduce our household costs, etc. So demand basically goes up when price falls. Now, let's say that the price goes even further down. It goes down to $2 a bag for rice, right? So a lot more people than before will want to come in and buy because they think that this is a bargain price. They should just hold it for a month or two, or maybe a week, or maybe a few days, and it's just going to bump back up to $5. And they're going to make a pretty good profit. It also brings in traders, it brings in household consumers, it brings in everyone basically. So this is showing that buyers start to step in to buy a product when prices go down. And when this happens, where buyers step in, this level of price is called a support level. So when there are more buyers than sellers, price goes upwards. And similarly, in different words, we can say what happens when prices reaches a support level. Well, it's pretty simple. Support will always push prices upwards. Similarly, resistance is a price level where sellers are coming into the market and they start selling a product. So when prices are rising and they're going up and they're going out of control, things are becoming very expensive. People wouldn't want to buy. They want to sell. So if anyone is already holding on to some kind of product and that price goes very high, they can just sell it off in order to make a good profit. So we're going to take an example again, using the same example. Let's say rice is selling for $10, and maybe you bought let's say 5 bags of rice, and we were thinking that you're going to use it over the next couple of weeks or couple of months, etc. Maybe you're a trader, or you trade with rice and you buy large quantities and you sell. So when price, let's say, reaches, it just shoots up to $20 a bag, a lot of people would say that, look, we're not going to use it right now, and probably prices are going to go down just in a week or two. So they may want to sell it. They don't want to buy anymore. So when you stop buying, the demand goes down and the supply increases. So let's say we'll just make this a little more interesting. That a price goes up even further up to $25 a bag. So people who are holding on to large stocks will just say this is an unbelievable price level. We've been buying for much lower. We've been selling for $10 all year round, and now the price is at 25. That's like 150% profit. So everyone is going to want to sell, and buyers are not going to be there. So prices, when supply increases, prices start to drop. And this level is called a level of resistance. So every time there are more sellers than buyers, prices are going to go downwards. And in other words, a resistance level, when you reach that resistance level, prices are going to move downwards. Now, this is a general rule that is studied even in economics, and it may be new to you, for some of you. But as we go on with this course, we're going to look at some charts, etc. We get a lot of practice. This is just going to come very naturally to you. It's very easy stuff. Now we need to apply this information onto a chart. So you can see a candlestick chart with prices moving up and downwards. Below, right here, there is a support line and there is a resistance line up here. This is drawn just to try and explain the situation to you. When prices reach a support level, when they've been going downwards, buyers step in and they push the price upwards. Now when price is moving upwards, there is a level at which people think that this is just too overvalued. Resistance comes in and price starts to move downwards. Again, as price moves upwards on this candle, you can see that there's a big struggle between the buyers and the sellers. Buyers are trying to push price upwards and sellers are trying to push price downwards. Eventually we see that the sellers are successful and price moves all the way down. It just gets knocked all over to the support level, which is where buyers come in again and push the price upwards. It reaches resistance and then it comes back down to support and then moves back up to resistance. These are support levels. Now, every time we want to confirm that this is a valid support level, we need to look at the past. We need to say, has this price level been tested before? Have buyers and sellers engaged in a struggle in the recent past where the sellers have failed and the buyers have managed to push prices upwards? So this one depends on the one right before. So every time if price were to move downwards, right, so we're going to be looking at the previous support level. Similarly, if this part of the chart did not happen, we would say that prices are moving downwards here. So we would be looking at this level here. So on our charts, we're going to draw this long horizontal line, and then maybe a little later on we can see the price moves back downwards, and we already know that at this level buyers came in and pushed the price upwards. So if price were to come all the way down here, we know that this is an entry point. We want to buy because prices are likely to go upwards. So similarly, when resistance steps in, the sellers are going to be pushing prices downwards. So we can see by these two that these are levels of resistance. This one is going to be, whenever price reaches this level, we're going to look at the past, and since there was a downward push right there, we can confirm that yes, this is a resistance level. Similarly, at this point here, we don't know what's going to happen next, but what we are going to see is that at this same level prices have been moving downwards. So our expectation of price movement is that there's going to be a retracement, is going to go downwards. Sellers are going to overcome the buyers. Now in this kind of situation, if you already bought at this level here, this is the point where you need to get out of your trade. Perhaps prices are going to go downwards, way downwards, and you can buy it again and then sell it when it reaches the resistance level. So a very effective and very basic strategy of trading is that you buy low and you sell high. Now you can also short sell in certain markets, in certain symbols, which would mean that every time price comes down, you will buy at this level, you're going to sell out, then price comes downwards, you can buy at this point. But let's say if you were to miss out and prices were somewhere at this level, so you could probably just wait. If this trade didn't go through, you could just come here and you could short it, and then prices are going to move downwards. So here we have another chart, and let's go through this and try to apply support and resistance lines. Now when we have a chart and we want to start out making support and resistance lines, we need to start somewhere in the middle or towards the end, but not all the way to the end of the chart and not all the way at the beginning. This is because we want to look at what has been happening in the recent past in order to be able to predict prices in the future. So I'm going to start out with something like this, some level right here. I'm seeing the prices are moving upwards and then they start moving downwards. So I'm assuming that there is a level of resistance, and I'm going to draw a small line right about there. So resistance is a level where prices are driven downwards. So let's learn by practice. We're going to draw a small line, and now that our line is there, we need to confirm whether this level is actually valid or not. So we'll draw another line at the same level but sometime in the recent past, and let's do another one right there. So we can see in both of these instances that prices have been moving upwards, and then they moved back right there, and then selling pressure came in, price went down. Similarly, price came up here. The sellers were pretty successful here at driving prices all the way down. And then similarly it happened here again. So this level is actually a valid level, and so we're going to draw a long line of resistance. We don't need these individual small lines anymore. Now we're going to go in and we're going to say that prices have been going down in all three of these instances. Let's do some support lines here. So this level or this zone is where prices have been, the downward movement has been stalled. It didn't really go upwards, but then sellers pushed the prices back downwards to that support level, and then there was this huge upward move. But in order to confirm this, we just can't jump to a conclusion. Even though we see a huge upward trend in price, we still need to go back and confirm whether at that level buyers stepped in sooner or later. In certain cases, just like here and here, sellers just stepped in immediately. But over here in this price level or in this zone, we see that the selling pressure did fade and price moved back upwards. So yes, this is a valid level of support. And every time we have a valid support level, we expect that prices are going to move upwards. Now, once prices have moved upwards, we see that they break through our resistance line, and then they come back to the same resistance line. So even though buyers have been in control and they managed to break through this line, the sellers stepped in and pushed the price back downwards. Now this is the second step that we need to learn about support and resistance. So basically, price keeps moving back and forth between the support and resistance levels, but sometimes there's going to be a break in the resistance level or in the support level. In this case, you can see that there is a break of the resistance as price moves upwards. And whenever we see this, price moving above the resistance, this buying pressure is bound to fade, and sellers are going to step in and they're going to drive prices back downwards. Now whenever this happens, we see that the resistance level later on after the break turns out to be the new support level. So as prices push upwards, sellers come in, they push the price back downwards, but at this level now, which was the previous resistance, is now going to start acting as support, and then it'll push prices back upwards. So essentially what happens is that we have a new level of resistance and a new level of support. Once prices come all the way down to the support level and then they start bouncing upwards, this is a clear sign that this level of support is now valid. So ideally, you do not want to trade at this point. You want to let the price bounce back upwards, and now every time it comes back to the same level of support, we can accurately say that now there is a large possibility that prices are going to rebound upwards. And this continues to happen again and again until a support and resistance is broken. When a support level, on the other hand, is broken, this support level becomes the new resistance. In the next video, we're going to move over to the investing.com website, where we will open up some real charts. We'll apply the support and resistance lines, and we'll see how price is driven between them and what happens when the support and resistance lines are broken.